20 years from now, the first trillionaire will make their fortune not on Earth, not in Silicon Valley, not on Wall Street exchanges, not in the depths of Congo or Siberia. They will make it at the point where the sun's gravity holds metal more valuable than all of Earth's reserves combined. Asteroid 16, Psyche, according to current estimates, is worth $10 quintillion. That's a number with 19 zeros. For comparison, all the gold ever mined by humanity is valued at roughly 12 trillion. The entire global economy, about 100 trillion. Psyche is not an asset. It is a conceptual error in the coordinate system. For a long time, space was perceived as a realm of romance, scientific achievement, existential quest. But the romance ended the moment private companies learned to return rockets and calculate the cost per kilogram to orbit. Today, space is a market, the last illiquid asset that will become the most liquid asset in history. And most investors are not even aware that their portfolios are already obsolete, that earthly markets built on scarcity are preparing to meet an era of abundance, and that this transition will not happen gradually, but like an avalanche. The end of scarcity. Earth as a closed system. The planet we live on is not an infinite repository of resources. It is a thin crust over a molten core where everything valuable has either already been extracted or lies at depths inaccessible to modern technology. The entire history of human civilization is a history of attempts to cheat this closure. We have moved from surface deposits of copper and tin to ultra-deep wells and underwater platforms. Each new step downward cost more than the previous one. Each next gram of metal required more energy, capital, and time. Economists love to talk about technological progress as a solution to the resource problem. They say, if something becomes scarce, the market will find a replacement or improve extraction efficiency. This logic worked up to a certain limit. But a limit exists. Geology does not obey economic theory. Platinum lies where it lies. Lithium will not appear in Europe's depths just because European electric car manufacturers need batteries. Rare earth elements will remain rare, even if their price increases tenfold. The illusion of abundance was sustained by the fact that humanity, for the past 200 years, has been exploiting the most accessible deposits. Now those deposits are depleted. Those that remain require investments incomparable to previous ones. Asteroids as concentrated capital. Now look in the other direction. Beyond the atmosphere, millions of objects orbit, each of which is a natural warehouse of metals formed 4.5 billion years ago. Asteroids did not need tectonic processes to concentrate valuable elements. They originally consist of what on Earth requires digging kilometers deep. Metallic asteroids are the cores of dead planets. What on Earth is hidden under the crust and mantle lies here on the surface, accessible for capture. One small M-class asteroid, 100 meters in diameter, can contain more platinum than has been mined in all of human history, not in theory, in reality. The average concentration of platinum group metals in such objects is tens of grams per ton. That is hundreds of times greater than in the richest earthly deposits. And we're not talking about one asteroid. We're talking about hundreds of thousands of potential targets, many of which are in orbits close to Earth, making them energetically accessible. When the Spanish conquistadors brought New World gold to Europe, they did not just enrich themselves, they collapsed the value of gold and changed the structure of European economies for centuries to come. What is happening now is not just a new deposit, it is the discovery of an entire continent of resources, a continent where the concentration of valuable substance is higher than anywhere on Earth. The only difference is that this time no one will be robbing the local population, because there is no local population. Lithium, platinum, rare earths, the myth of infinity. The transition to green energy looks like saving the planet from its carbon footprint, but this salvation has a price that few have calculated to the end. Electric vehicles require lithium. Wind turbines require neodymium. Solar panels require silver and tellurium. Hydrogen energy requires platinum for catalysts. Every step towards decarbonization increases demand for elements that Earth physically lacks to realize ambitious plans. The International Energy Agency estimates that achieving carbon neutrality by mid-century will require increasing lithium mining 40-fold. 40, and that's just lithium. The situation with cobalt, graphite, and rare earth elements is no better. The problem is not only volumes, the problem is geopolitics. Lithium is mined mainly in Australia, Chile, and Argentina. Cobalt is mined in the Democratic Republic of Congo, where supply chains are unstable. Rare earth metals are 90% controlled by China. This is not a diversified market. These are narrow bottlenecks through which all of the world's future industry passes, and each of these bottlenecks is a geopolitical lever, a tool for pressure, a hidden tax on the entire global economy. The cost of an electric vehicle includes not only the metal, but also the political volatility of supplier countries. When people talk about scarcity, they usually mean a market shortage here and now. But real scarcity is structural. It is not a question of price. It is a question of physical availability. You can raise the price of lithium tenfold, but new deposits will not appear instantly. Exploration, mine construction, production launch, that's a decade minimum. And demand is growing exponentially. The result is predictable, a structural imbalance that cannot be compensated by market mechanisms. Asteroids do not solve this problem immediately, but they offer an alternative that did not exist before, an exit beyond the closed system. The illusion of stable markets, commodity markets today, function as if asteroids do not exist. Futures contracts for metals are based on projections of terrestrial supply and demand. Analysts account for inflation, exchange rates, political risks, strikes, natural disasters. But no major bank incorporates into its models a scenario where a player with a virtually unlimited supply of platinum or rare earths enters the market. Why? Because it looks like fantasy. Because the planning horizon of traders is a quarter, a year at most. Because the market looks at the past, extrapolating trends, not at the future. This is a classic error of linear thinking. It is assumed that tomorrow will be like yesterday, only slightly more volatile. But the history of markets is full of moments when a new element is integrated into the system and the entire price structure collapses within months. The shale revolution collapsed oil quotes. The emergence of synthetic diamonds destroyed the premium for naturalness. Mass production of aluminum turned it from a precious metal into packaging material. Each time the market did not see it coming because it was looking in the wrong place. Asteroids are not just a new source of metals. They are a change in the very nature of supply. A terrestrial deposit depletes. An asteroid deposit does not, because there are hundreds of thousands of them. Terrestrial extraction requires workers, infrastructure, environmental permits. Asteroid extraction is autonomous, independent of human factors, creates no emissions. Terrestrial logistics is limited by geography. Asteroid logistics is a matter of orbital mechanics and fuel. These are different systems, and a market built on one will inevitably collapse upon colliding with the other. The transition from physical scarcity to informational. The most interesting part begins when the abundance of substance shifts scarcity to another plane. If metals become cheap and accessible, their value as an asset will evaporate. But this does not mean the concept of scarcity itself will disappear. It will simply relocate. What will be scarce will not be raw materials, but knowledge of how to use them. Not access to the resource, but control over the infrastructure for its delivery. Not ownership of the metal, but ownership of the right to determine who gets it first. Information, energy, orbital positions, computing power. These are the new rarities. In a world where platinum can be mined by the ton, it is more important to know where exactly to mine it, how to optimize the route, how to ensure transportation security, how to integrate this flow into the Earth's economy without collapsing markets. This is not metallurgy. This is systems management, next-level logistics, a game of anticipation. Those who understand this first will gain an asymmetrical advantage. Others will play by the old rules until the rules cease to exist. The Trillionaire's infrastructure. Robotic mining asteroids cannot be colonized in the classical sense. They have no atmosphere, no gravity, no protection from radiation. Sending people there is economically pointless, technologically excessive, and ethically dubious. Mining will be robotic, fully autonomous, controlled by artificial intelligence that will make thousands of decisions per second based on sensor data, machine learning algorithms, and preset strategies. Humans will be present only at the design and remote control stage. Everything else, machines. This means a fundamental change in extraction economics. No salaries, no social packages, no unions, no strikes, no human errors caused by fatigue or stress. There are only capital costs for creating systems and operational costs for maintaining them. A robot does not require rest, does not need to return home, does not depend on political decisions about labor safety. It works until failure, then is replaced or repaired by another robot. This is not exploitation of labor. This is pure capitalism of machines, where the only scarcity is the quality of code and the reliability of hardware. But autonomy has a downside. Every error in an algorithm, every system failure, is a potential catastrophe costing billions. An asteroid craft cannot call tech support. The signal delay to Earth is measured in minutes, and in case of an accident, the count is in seconds. Artificial intelligence must be able to make decisions with incomplete information, adapt to unforeseen circumstances, assess risks, and act without confirmation. This is a level of autonomy that no earthly system has yet achieved, but it will be achieved, because without it, mining is impossible. 3D printing in a vacuum logistics is the main enemy of space expansion. Every kilogram delivered from Earth to orbit costs thousands of dollars. Every nut, every tool, every spare part increases the cargo mass and, accordingly, the mission budget. The solution is obvious. Produce everything on site. Turn the asteroid not just into a source of raw materials, but into a factory capable of creating necessary tools and structures right in space, using the asteroid's own material. Additive manufacturing technologies, 3D printing, already allow creating complex metal parts from powder. In conditions of vacuum and weightlessness, these processes are even more efficient than on Earth. No oxidation, no gravitational deformation, no need for protective atmospheres. Asteroid raw materials can be melted, turned into powder or wire, and printed into everything, from structural elements to new robots. This is a closed cycle where mining reproduces itself. Imagine a mine that grows itself. The first set of robots arrives from Earth. They begin mining and simultaneously print new robots from the mined material. These new machines join the process, increasing productivity. After several cycles, the amount of equipment grows exponentially, and dependence on earthly supplies drops to a minimum. This is not just cost reduction, it is a change in the very model of industry. A factory that does not depend on supply chains, is not subject to inflation of earthly materials, is not limited by launch windows. It works continuously, building capacity until it hits the limits of the asteroid itself, orbital factories. But even mined and processed metal is still in space. Bringing it raw to Earth means losses during atmospheric entry, logistics costs, landing risks. It is more logical to process the raw material into a finished or semi-finished state right in orbit. Create catalysts from platinum, magnets from rare earths, structural elements from nickel and iron. Orbital factories are the next level of infrastructure, turning space not into a warehouse, but into an industrial zone. This changes the very logic of the market. The question is no longer how much metal is mined, but what is produced from this metal and who needs it. Value filtration occurs before delivery to Earth. What descends to the planet is not ore, but a product. This reduces cargo mass, increases added value, decreases dependence on earthly processing. An orbital factory is not just a plant in weightlessness. It is a control node through which all the flow of extraterrestrial resources passes. Whoever owns this infrastructure determines what reaches the market, in what quantity, and at what price. This is a monopolistic position, even if the raw material is accessible to all. Who builds the railroad history teaches, those who control the infrastructure earn more than those who exploit the resource. Railroad owners in the 19th century grew rich faster than gold miners. Oil magnates did not just extract oil, they built pipelines, refineries, gas station networks. Rockefeller understood this before others, and it made him the richest man of his time. In space, the same principle applies. It is more important not to mine an asteroid, but to build the system through which all flows will pass. Today, this infrastructure is being built by private companies. SpaceX is reducing launch costs. Blue Origin is developing reusable systems. Rocket Lab focuses on small satellites. Axiom Space is creating commercial orbital stations. Each of these companies is not just a market participant, they are bricks in the future monopoly on access to resources. The one who first builds a stable, cheap, scalable delivery and processing infrastructure will gain control over the entire market. Not because others cannot mine, but because without this infrastructure, mining is meaningless. States are lagging in this race. Their planning horizons are tied to election cycles, budget processes, political compromises. Private companies act faster. They make decisions in weeks, not years. They invest their own capital without waiting for government subsidies. They experiment, fail, and iterate faster than any agency. NASA and ESA are scientific institutions, important for fundamental research, but inefficient for commercial exploitation. Space mining will be private, and those who invest in this infrastructure now will gain access to rents for decades to come. Private capital versus state programs. The difference between the private and state approach to space is a difference in incentives. The state launches programs for prestige, scientific knowledge, strategic presence. Profit is not the main goal. A private company exists for return on investment. Every dollar must generate more dollars. This makes the private sector tougher, more efficient, more ruthless towards failure. But that is precisely why it achieves results faster. Elon Musk publicly stated that SpaceX was created for colonizing Mars, but SpaceX's real business model is Starlink, satellite internet generating billions in revenue. That money funds the development of Starship, which in turn will reduce the cost of delivering cargo to space to a level where asteroid mining becomes profitable. This is not romance. This is capitalism using romance as marketing. Who first achieves economies of scale? Space infrastructure has powerful economies of scale. The more launches, the lower the cost of each next one. The more orbital stations, the cheaper their maintenance. The more robots on asteroids, the faster the initial investments pay off. The first player to reach critical mass creates barriers to entry for everyone else, because competing with them becomes economically unprofitable. Their costs are lower, their experience greater, their infrastructure already works. This is not a technological advantage. It is a structural one. The one who first reaches scale will become the standard. Their orbital ports will become mandatory docking points. Their communication protocols, the industry standard. Their robotic systems, the base platform for all subsequent developments. This is not the victory of one company. This is the formation of a monopoly on the very possibility of working in space. And whoever invests in this company now is investing not in a startup, but in the future oil rig of the universe. Risks, from radiation to default technical failures. Asteroid mining is an engineering task at the limit of possibilities. Every system operates in conditions for which there are no analogs on Earth. Vacuum, radiation, micrometeorites, extreme temperatures. Any failure can lead to total mission loss. And we are not talking about millions of dollars. One major mission to capture and process an asteroid costs billions. Failure of one sensor, an error in the code, an unforeseen mechanical breakdown, and all that capital turns into space debris, a micro error becomes a systemic collapse. A robot cannot call an operator and say, "I have a problem." The signal delay between the asteroid and Earth can be tens of minutes. By that time, the situation will have already fallen apart. Autonomous systems must be able to diagnose and fix errors on their own. But what if the error is in the diagnostic system itself? What if the algorithm does not recognize a problem because it falls outside the scope of preset scenarios? Space does not forgive improvisation. There is no plan B if plan A fails. Cascade failures are the main nightmare of engineers. One system component fails. This overloads neighboring components, which start operating in abnormal mode. They break next. The load redistributes further. After a few hours, the entire system is dead. On Earth, this can be stopped because there is physical access. In space, there is not. The only defense is redundancy, duplicating critical nodes, backup algorithms, distributed control systems. But redundancy increases mass, complexity, and cost. Engineers are forced to balance between reliability and profitability, knowing that an error in this balance could cost the entire project. Transportation hazard. An asteroid being returned to Earth is not just cargo. It is an object weighing thousands or millions of tons, moving at several kilometers per second. Any error in trajectory calculations, any unforeseen gravitational disturbance, and this object can veer off course. At best, it flies past Earth and is lost in space. At worst, it enters the atmosphere uncontrolled. Trajectory control is not just a technical task, it is a geopolitical problem. Who is responsible for safety? Who guarantees that a private company will not make a mistake? What if an asteroid, controlled by a corporation registered in one jurisdiction, falls on the territory of another state? Who will compensate for the damage? Existing space law does not provide clear answers. The Outer Space Treaty of 1967 prohibits national appropriation of celestial bodies, but says nothing about commercial use. The 2015 U.S. law allows private companies to mine asteroid resources, but other countries do not recognize it. This is a legal vacuum in which companies operate at their own risk. An asteroid as a potential weapon is not fantasy. The kinetic energy of a massive object moving at cosmic speed exceeds the power of a nuclear charge. If the technology to control asteroid trajectories becomes available, it automatically becomes a weapon. Not necessarily used intentionally, losing control is enough, or creating the impression that control is lost. This is a new form of blackmail that never existed before, and there are no international mechanisms to prevent it. Insurance that doesn't exist. Insurance companies work based on statistics. They assess the probability of an event, multiply it by potential damage, and set a premium. For asteroid mining, such statistics do not exist. There is no history of successes and failures, no data on failure frequency, no precedents for damage assessment. No major insurance company will insure a mission costing billions because it cannot assess the risk. And without insurance, investors will not enter the project. This is a vicious circle. The solution could be syndicates, groups of investors taking the risk upon themselves, or government guarantees, turning part of the risk into a political tool, or a complete refusal of insurance, where investors consciously accept capital loss in exchange for potentially enormous profit. This makes the asteroid mining market similar to venture capital, only with zeros several orders of magnitude larger. Out of 10 projects, 9 will fail, but the one that succeeds will pay for all failures and bring profit incomparable to earthly assets. Political struggle space has traditionally been perceived as a zone of international cooperation. Space stations were built jointly. Scientific missions were funded by consortia of countries. But as soon as space becomes a source of profit, cooperation ends, competition begins, orbits become trade routes, asteroids become deposits, lunar bases become outposts of influence. This is not Antarctica, where a treaty froze territorial claims. This is the great geographical discoveries only in a vacuum. Every orbit is a resource. Low Earth orbit is already overcrowded with satellites. Geostationary orbit, one of the most valuable assets in space, because it allows satellites to hover over one point on Earth. Lagrange points, stable positions, ideal for space stations and warehouses. All these positions are finite. Whoever occupies them first gains a strategic advantage, and states understand this. The USA, China, Russia, Europe, India all have their own space programs and all compete for the same positions. Militarization of infrastructure is inevitable. Every space station can be used for surveillance. Every orbital vehicle can carry countermeasure systems. Every rocket capable of delivering cargo to an asteroid is capable of delivering weapons to orbit. Space is not demilitarized. It just hasn't been openly militarized yet, but it's a matter of time. And investors entering this market must understand their assets could end up in a zone of military conflict, even if they themselves are not involved in politics. Legal vacuum. The Outer Space Treaty of 1967 prohibits national appropriation of celestial bodies. But what does appropriation mean? If a company mines metal from an asteroid, is that appropriation? If it installs equipment on it, is that occupation? If it sells that metal, who owns the revenue? The treaty's text is ambiguous because it was written in an era when commercial mining seemed like fantasy. Now fantasy has become a business plan, and the law hasn't had time to adapt. Different countries interpret the law differently. The USA passed a law allowing private companies to mine and sell asteroid resources. Luxembourg did the same, attracting space startups with legal incentives. Russia stated that any mining without international coordination is illegal. China has not spoken publicly, but is actively building its own capabilities. These are not just disagreements. This is the seed of a future conflict where each player will defend their interpretation of the law, backed by technological power. Who will be the arbiter? The UN? The International Court? Private arbitration? No one knows. As long as no major conflict occurs, the system will not form. And this means early players operate in conditions of complete legal uncertainty. They invest billions without knowing if their rights will be protected in 10 years. This is a huge risk. But precisely for this reason, those who take it will receive asymmetrical reward. Investor risks asteroid mining is an opaque asset. There is no exchange where shares in missions are traded, no standardized reporting, no independent auditors able to verify whether a company actually mined as much metal as it claims. An investor puts in money based on presentations, promises, and technical calculations that cannot be verified until the cargo returns to Earth, and that could take years. Or the mission could fail, and the investor finds out after the fact. Information asynchronicity is another problem. If a mission fails, it might be learned months later. By the time the signal arrives, the company analyzes the data and decides to announce the failure. Time passes. During that time, shares may continue trading based on outdated information. Insider trading in the space industry is not a violation of the law because the law hasn't been formulated yet. It is a moral problem that the market will solve itself, as always, through crashes and scandals. The risk of sudden asset depreciation is the main threat to investors. Imagine, a company owns rights to an asteroid rich in platinum. Shares rise. Analysts give positive forecasts. Suddenly a competitor announces they found an asteroid 10 times richer and mining will start sooner. The first company's value collapses in a day. This is not volatility. This is a complete revaluation. And there is no protection against it because information about space resources appears sporadically, unpredictably, often without warning. Economic shock on Earth, price collapse. Imagine one asteroid entering the market, containing as much platinum as humanity has mined in all its history. The price of platinum will collapse, not by 20%, by an order of magnitude, maybe 2, because supply will suddenly exceed demand by tens of times. The market is not ready to absorb such volumes. There is no infrastructure, no demand, no mechanisms able to balance this abundance. Result, price collapse. Metals will become consumables. What was once precious will become cheap. Platinum, used in catalysts, jewelry, electronics, will lose its premium. Gold, whose value always relied on rarity, could turn into just another industrial metal if enough gold-containing asteroids are delivered to orbit. This is not just a price drop. This is the destruction of the very concept of preciousness. Countries whose economies depend on raw material exports will face collapse. South Africa, one of the largest platinum producers, will lose its main source of foreign currency income. Chile, exporting lithium, will face a choice: either dump prices or leave the market. Russia, dependent on oil, gas, and metals, will face the devaluation of its resource base. This is not an economic adjustment. This is a structural shock capable of collapsing entire states if they do not adapt in time. Collapse of resource-based economies. Economies built on resource exports operate on simple logic. The land contains something valuable. It is extracted, sold, income distributed. But if the valuable is no longer valuable, the entire model collapses. Commodity currencies depreciate. Budgets don't balance. Social programs stop. Capital flight begins. Investors flee countries whose assets have suddenly turned into ballast. This is not a recession. This is the disintegration of an economic model. Some countries will try to reorient to other industries, but that requires time, capital, educated workforce. You cannot turn a mining economy into a technological one in 5 years. You cannot instantly retrain the population, rebuild infrastructure, attract investment to new sectors. The transition will be painful. There will be protests, political instability, possibly revolutions. History shows when an economic model collapses, the social fabric tears soon after. Loss of national advantages. Now, control over resources is geopolitical power. Saudi Arabia is influential because it controls oil. China, because it controls rare earths. Congo, because it has cobalt. These resources provide leverage, allow dictating terms, manipulating markets. But what happens when these resources can be mined in space, bypassing these countries? The geopolitical map is redrawn. Those who control space infrastructure will become the new centers of power. The USA, China, possibly India and Europe, those who invested in space technology, the others will turn into periphery. This is not a new phenomenon. It is a repetition of the history of colonialism, only on a new level. Those who own the technology to access resources exploit them. Those who do not buy at prices set for them. The only difference is that this time it's not a continent being colonized, but the entire solar system. Hyperinflation of resources. Usually inflation is a price increase, but the opposite can happen. Hyperinflation of supply, when resources become so plentiful that their value tends to zero. This is the paradox of abundance. When there is too much of everything, nothing has value. Metals that were once assets turn into a burden. They need to be stored, processed, disposed of somewhere. But if they are worth nothing, who will do it? The logic of value destruction comes into play. Companies mining metals in space could artificially limit supply to maintain prices. This is a classic monopoly, but on the scale of the solar system. Or, conversely, they could flood the market, destroying competitors through dumping, then set their own terms. In any case, the market ceases to be free. It becomes managed by a few players controlling access to resources. Margin compression to zero happens when production costs become the only price factor. If metal is abundantly available, its price drops to the cost of mining and delivery. This turns the industry into a low-margin business where only those who can scale survive. Small players are washed out. Monopolies or oligopolies remain. This is not bad or good. It is simply a new market structure to which investors must adapt. The banking system gold has been a measure of value for centuries. Central banks hold it in reserves. It provides currency stability, serves as a safe haven in crises. But what happens if gold can be mined in space in quantities exceeding all earthly reserves? Reserves depreciate. Currencies partially backed by gold lose their anchor. Banks are forced to revalue assets. This is not a technical issue. This is a crisis of trust. What happens to collateral? If a bank issued a loan secured by gold reserves and gold depreciates, the loan becomes unsecured. The bank incurs losses. If there are many such loans, the bank can go bankrupt. If there are many such banks, a systemic crisis begins. This is not a hypothetical scenario. This is a real risk that the financial system has not yet assessed because it does not take space mining seriously. Revaluation of reserves will become inevitable. Central banks will be forced to diversify reserves, moving from physical assets to other forms of value. But to what? Currencies are subject to inflation. Stocks are volatile. Real estate is local. Perhaps the new form of reserves will be rights to space infrastructure, energy flows, data. This is a transition from the material to the intangible, from substances to processes. A shift in value standards. In a world where substance is cheap, value relocates. From raw materials to control of flows, from owning metal to owning the right to determine who gets the metal first, from scarcity of things to scarcity of access. This is not just an economic transformation, it is a philosophical shift in understanding what it means to have. Data will become the new currency. Knowledge of where resources are, how to mine them, what risks exist, which technologies are effective. Energy will become a measure of value. Not metal, but the kilowatts needed to process it. Infrastructure will become the asset. Not the asteroid, but the ship capable of capturing it. Not gold, but the spaceport through which all cargo flows pass. Space energy as a new industry will grow out of asteroid mining. Solar panels in orbit, where there is no atmosphere, and day lasts forever. Energy transmitted to Earth via microwaves. This is not fantasy. This is an economically viable technology once the cost of delivering equipment to orbit decreases, and whoever controls this energy controls the price of every kilowatt, every produced good, every launched factory. Energy is the new gold, only it cannot be mined. It can only be produced and distributed. Epilogue: The New Investor. Transformation of thinking. The classic investor thinks in quarterly reports, annual returns, balanced portfolios. They diversify between stocks, bonds, real estate, gold. They hedge risks with derivatives. They follow trends, read analytical reports, listen to expert opinions. This worked in a world where the rules of the game are stable, where risks are known, where the future resembles the past. But that world is ending. The new investor must think not in terms of returns, but structural shifts. Not what is growing now, but what will change the rules in 10 years. They are not looking for alpha. They are looking for the moment when beta itself changes. This is not active management. This is strategic thinking, where the horizon is decades, and the bet is on rewriting the economic map. This requires not only capital, but also the ability to tolerate uncertainty, not demand immediate results, not panic at volatility. Long horizon as a competitive advantage. Most investors cannot withstand uncertainty longer than a few years. If an asset does not bring income, they exit. If the news is negative, they sell. This creates an opportunity for those who can wait, who understand that real value does not manifest immediately, who are ready to invest in infrastructure that will pay off in 15 years, but bring returns measured in thousands of %. This is not for everyone. This is for those who understand that time is an asset more valuable than money. Capital in a world without scarcity? What does it mean to own when everything is accessible? If metals are cheap, if energy is abundant, if production is automated, what remains rare? Attention, time, access, rights, reputation, connections, things that cannot be mined, produced, or bought with simple capital. In a world of abundance, scarcity moves to intangible assets, and those who understand this will reorient their investments from things to processes, from ownership to control, from accumulation to access. The role of control and access becomes central. Owning an asteroid is meaningless without the technology to mine it. Owning metal is meaningless without a market to sell it. Owning capital is meaningless without the infrastructure to invest it. The real value is the nodes of the network through which flows pass, the ports through which ships pass, the standards to which technologies conform, the reputation that provides a credit of trust. Investing in this is harder than buying a stock, but it is what will survive any market fluctuations. Preparing the mind. Abandoning earthly patterns is not just an intellectual exercise, it is a necessity. Markets built on scarcity have taught us certain thinking patterns: buy low, sell high, diversify, hedge, follow the trend, don't fight the market. All these rules work in an established system, but when the system breaks, the rules stop working. One must learn to think in first principles, not analogies. Not how it was before, but how it must work logically. The ability to think on a scale of decades requires discipline. It is easy to invest in a project that pays off in a year. It is difficult to invest in a project that pays off in 15, knowing you will not see the result for most of that time. It is difficult to explain to others why you are putting capital into something that looks like fantasy. It is difficult to hold a position when everyone around says you are wrong, but this is precisely what distinguishes those who profit from structural shifts from those who simply follow the crowd. View from orbit. If you look at Earth from space, it looks fragile. A thin film of atmosphere separating life from the vacuum, a small ball floating in infinity. Everything that seemed huge on the surface seems insignificant from here. Country borders disappear, political conflicts lose scale, economic crises look like local fluctuations in a larger system. This perspective changes priorities. Earth as an asset ceases to be perceived as an infinite source. It becomes one object in a larger system, not the center of the universe, but a launch pad, not the place where everything happens, but the place from which expansion begins. An investor thinking from this position sees the planet not as a closed market, but as one of the nodes in the emerging space economy. And this changes everything. The fragility of the familiar world becomes obvious. Systems that seemed stable, currencies, states, markets, social structures, are all constructs held together by consensus and inertia. When a new source of resources appears, a new technology, a new player, these constructs can collapse faster than anyone expects. An investor who understands this does not build a strategy on the assumption of stability. They build it on the assumption of change. Silence, instead of a conclusion. There is no manifesto, no call to action, no clear plan on how to invest in this transformation, because everyone must find their own path. Someone will enter space startups. Someone will invest in infrastructure companies building rockets and stations. Someone will hedge the risks of commodity market collapse. Someone will wait for the market to mature and enter on the next wave. It is not important exactly when this will happen. What is important is the understanding that it will happen, that space has ceased to be science fiction and has become an economic reality, that asteroid mining is not a question of if, but a question of when, that those who see it before others will gain an advantage measured not in annual percentages, but in orders of magnitude. Space trading is not buying shares of space companies. It is rethinking what value, scarcity, and capital are. It is the willingness to accept that everything taught in business schools may become obsolete in one generation. It is the ability to look beyond the horizon and see not risks, but opportunities. It is an investment not in an asset, but in a future that does not yet exist, but is already forming. The first trillionaire has already been born. Perhaps they do not yet know they will become a trillionaire. Perhaps they are now studying orbital mechanics, programming autonomous systems, calculating trajectories. Perhaps they are simply observing, waiting for the moment, preparing to leap. But they know one thing: the game has changed. And those who play by the old rules have already lost. Look at the sky, not as space, but as a market. Look at asteroids not as rocks, but as flying vaults of capital. Imagine a world where metals are cheap, energy is abundant, production is automated. Imagine an economy not limited by a planet's crust. Imagine an investor not afraid of a 20-year horizon. Now ask yourself, who do you want to be in this world? The one who observes or the one who acts?